If you're waiting for the perfect time to buy a home in Central Alberta, this conversation is for you. I hear this every single week. People tell me they're waiting to see what happens next with the rates, prices, with the market. On the surface, that sounds responsible. Waiting feels cautious. It even feels smart. But here's the reality most people miss: waiting doesn't remove risk, it just changes which risk you're taking. Today, I want to walk you through why waiting for the perfect moment often backfires here in Central Alberta, why this market behaves differently than the headlines suggest, and what actually matters more than anything as we head into 2026. This is a fiercely local conversation, not a national one. The common belief, the most common belief I hear is simple. If we wait, prices will come down. If we wait, rates will drop. If we wait, things will just be clear. And I want to slow this down for a moment because this belief didn't come from nowhere. Over the last few years, people they were rewarded for waiting. Markets changed quickly, rates moved fast, headlines were loud, and for a period of time, hesitation actually felt like the smart move. So when people say they're waiting, it's not because they're careless. It's because they're trying to be responsible. Waiting feels like protection. It feels like you're avoiding regret. I get that. It feels like you're buying yourself time, potentially. But here's where that belief starts to crack. The market doesn't freeze while you wait. Life doesn't pause. And the clarity people are waiting for rarely shows up all at once. It shows up gradually, quietly, and guess what? Most times unevenly. That's why waiting can feel comfortable in the short term, but complicated in the long term. Waiting feels like you're avoiding a bad decision, but in reality, most of the time, you're trading one uncertainty for another. Instead of asking, is this the right home for us? A lot of times I hear people saying questions like, yeah, we really like this home, but what if the rates drop again? Or what if the price comes down? Or internally, they could be thinking, what if we're wrong? Those questions sound logical, but they have a hidden cost. They keep you focused on what you can't control instead of what you can. And over time, that shift changes how decisions feel. Confidence erodes. Second guessing creeps in. Even good opportunities begin to feel risky, not because they are, but because uncertainty has allowed to grow unchecked. We see it all the time. People don't regret buying at the wrong time. They regret waiting so long that nothing feels right anymore. They just can't move themselves forward. This is where the local context really matters. I want you to think about how people talk about the market when they're watching the news versus how they talk about it when they're sitting at their kitchen table. National headlines are designed to be dramatic. They have to speak to everyone, everywhere, all at once. That's their job. But real estate doesn't work that way. Real estate lives and breathes locally. It's experienced street by street, neighborhood by neighborhood, community by community. And that's what being fiercely local actually means. And that's why it matters. I've always said this: the places that had the biggest real estate parties, prices going up, usually end up with the biggest hangovers, prices going down. Central Alberta didn't have the same kind of party that some of the major Canadian cities did have. Prices didn't spike as dramatically. Values didn't detach from local incomes the same way. And because of that, we didn't see or aren't seeing the same kind of correction. The market didn't break, it adjusted, which is normal. And that adjustment is exactly why waiting here comes with a different set of trade offs than waiting in places, say, like the Lower Mainland or Toronto or even Calgary. I've always believed you should use statistics the way a drunk uses a lamppost, for support, not illumination. So instead of throwing numbers at you, let me slow this down and explain what the trends actually feel like on the ground, in the trenches, here in Red Deer and the rest of Central Alberta. When we compare the last 90 days to the same time last year, homes are taking a little bit longer to sell, closer to about a month instead of, say, 3 weeks, depending on the price range, of course. That doesn't mean homes aren't selling. It means buyers have time to think and breathe just a little bit. They can look at more than one property. They can ask better questions. They can make decisions with less pressure. At the same time, most homes are still selling just under asking price, or, sometimes a little bit over. Again, depends on the price range. That tells us sellers are adjusting expectations and they're not giving homes away. And when you look at prices year over year, they've remained largely flat, not racing higher, not falling, they're not collapsing either. That combination, more time, more balance, and more stable pricing is exactly what a healthy market looks like. That's not a broken market. It's a balanced one. This is the part most people don't fully account for. Waiting has costs. They're just subtle and they compound over time. Number one, the lifestyle cost. People stay in homes that no longer fit their lives. Let's think about this. They're too small. They've outgrown them. They hate the layout. They hate the location. Well, hate might be strong, but the location's not perfect. They're not at the right stage of life for that house anymore. And at first, it feels manageable. But over time, people normalize inconvenience. It's just human nature. They normalize longer commutes. They, could be a longer walk for their kids, whatever. They normalize not having enough space. They normalize frustration, and that quietly becomes a new baseline. That cost doesn't show up on a spreadsheet, but it absolutely shows up in daily life. Number two, the opportunity cost. In balanced markets like Central Alberta, the best homes don't sit forever. They just don't. They're not always the cheapest homes. They're the homes that they make sense for the location, the condition, and the price. Those three factors. When people wait too long, they don't miss a house. They miss the window where the right combination existed. That's the key. And once that window closes, the next one rarely looks identical. We've heard it before. Dang it, we should have probably moved on that one. We're hearing that a lot more lately. Number three, the confidence cost. This is a quiet one. The longer people wait, the harder decisions feel. Fear replaces clarity. Hesitation replaces momentum. And eventually, people feel stuck. Not because the market is bad, but because waiting became the default instead of the strategy. There's a big difference there. Affordability doesn't improve because one big dramatic change. It improves when a few quieter things happen at the same time. A perfect storm, you might say. Number one, first, mortgage rates are meaningfully lower than they were a year ago. They're not back to historic lows, but lower enough to change how monthly payments feel. Secondly, wages have continued to move up here in Central Alberta. People are earning more today than they did just a few years ago. Thirdly, prices in Central Alberta have largely flattened instead of continually shooting and continuing to sprint higher. So when rates ease, incomes continue to rise and prices stop running away, affordability improves quietly. That's exactly what we're seeing here in Central Alberta. And this is where waiting usually goes sideways. People wait for everything to line up at the same time. We've talked about this before. Lower rates, lower prices, clear direction, more certainty. But markets don't improve in a straight line. They improve in pieces. First, the rates ease. Prices maybe stabilize a little bit after that. Confidence slowly comes back, gradually. And while people are waiting for all those pieces to arrive at once, something else happens. Think about it. They start measuring today's opportunities against the imaginary future scenario. And the imaginary scenarios always look better than real ones. That's how people talk themselves out of perfectly reasonable decisions. Not because the opportunity is wrong, but because it isn't perfect. That's why waiting for the perfect condition often backfires. What matters more than timing is clarity. Clarity around your budget, clarity around your lifestyle, clarity around how long you plan to stay in that home. Those three things matter more than trying to predict the market. Remember, real estate's a long game. When those pieces are clear, timing becomes it's less intimidating. You stop reacting to the headlines. You stop chasing perfect conditions, and instead, you start making intentional decisions based on your life, not all the noise around you. That is the difference between waiting passively and moving forward confidently. Listen, waiting doesn't mean you're wrong by any stretch. I'm not saying that. But waiting without clarity often leads you to missed opportunities. That we've seen many times. Central Alberta continues to be a market defined by stability, balance, and local realities, not national headlines. Hey, if this helped bring clarity, feel free to share it with someone who's been stuck waiting. Because you know what? Clarity beats noise every time.